Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the world is waiting to see what direction inflation will take from here and how fast it'll move. But first, American mortgage applications rose again as another indication the US housing market is coming back to life. The rise from the prior week was minor, and this was despite virtually no change in the benchmark interest rates there. It was their third consecutive rise, but to be fair, it really isn't out of the lifeless pattern as followed since late 2022. But at least it has halted the fall they had between the recent peak in late 2020 and late 2022. And there was other American data released overnight, but none of it was market moving. Both wholesale and retail inventories were little changed in May, and the May merchandise trade balance came in slightly lower. Later this morning, the US Fed will release the results of their annual stress tests, their health check for a group of large American banks. It is expected to show they have ample capital to weather any fresh turmoil in their banking sector. Each time they do this, they update the stresses they are being subject to, so it really isn't strictly an improvement from the last time exercise. In Europe, at the ECB Forum on Central Banking, Fed boss Powell said at least 2 more rate hikes are on the table this year from them because of the very strong labour market in the US. At the same talkfest, ECB President Lagarde and Bank of England Governor Bailey both said they expect further tightening measures to cool down inflation too. In China, more indications of the economic funk. Profits earned by the industrial firms dropped by 19% from a year earlier in the first 5 months of 2023 on weak demand and margin pressures. The decline followed a 21% plunge in the prior period and a 4% fall in 2022, with profits shrinking at both state-owned firms and the private sector. In South Korea, consumer sentiment continued to improve with another good gain in June. In March in Australia, CPI inflation was running at 7%, but yesterday they released their May inflation indicator, which has it easing to 5.6%. That's a 13-month. The RBA next reviews its cash rate target on Tuesday next week, so the chance of a hold then might seem to have gone up. But then again, 5.6% is still way above their target, and the RBA doesn't always do what markets think the signals are. Besides, some are noticing a rise in inflation expectations there. The US Treasury 10-year yield will start today at 3.72% and down 5 basis points in a yo-yo pattern recently. And the price of gold will start today at $1,912 an ounce, and that's unchanged from yesterday. And oil prices are $1.50 higher from yesterday, now just under $69.50 a barrel in the US, while the international Brent price is just under $74.50 a barrel. And the Kiwi dollar starts today at 60.8 US cents, and that's down almost a cent from yesterday and back to where it was 2 weeks ago. Against the Aussie, we've slipped slightly to 92 Australian cents, and against the euro, we're half a cent softer at 55.7 euro cents. That all means our trade-weighted index has fallen to 69.4 and down 60 basis points from this time yesterday. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by Interest.